Hi traders and welcome to the Technical Analysis Market Watch on Friday the 24th of January. So I've seen some big action this week in a lot of the key indices and also the currencies with the inauguration of Donald Trump and also a very, very strong earnings season. So we'll jump straight into the markets and see if we can identify any trades for today or early into next week. All right, so we'll start out here with the Aussie USD, and we can see that we've seen an interesting sort of week with a really, really big launch on the early in the week, obviously on the Monday. We had a US public holiday there, of course, but look, it didn't really make much difference to the currency. A big move up to 62.80, actually it was, and then we saw a bit of volatility throughout the couple of days after, but trading over at the 20 moving average, which is the most important thing. It did try to give it back the next day. And of course, it actually pulled straight up and finished very, very strong, which is a very bullish sign. And the last 2 days have been very strong. So trading above the 20 moving average is always a good sign after a very, very big drop. It hasn't done that in quite some time, obviously. As you can see, apart from this one candle here, it's been the only one that's been able to close above the 20 moving average. Now we've had 4. So a very, very strong indication that the strength has returned to the Aussie USD. And obviously we're seeing a sign now that we've got the lightning bolt as well. We've got the low, the high, the higher low, and now we've got a higher high. So really for me to be convinced about this, I think it's got to close probably above the 63. I think a lot of people have already longed this. So, and you've been able to take advantage of some of this move, which is good already anyway. But I think that the potential of movement to 64 is pretty strong. The 64-cent mark is a pretty reasonable level. And then on top of that, the 65 is where the real strength lies. And I'm not saying we're going to go to 65 so quickly, but look, our first target will be the 64-cent mark. And I think all we need to do is see a close above the 20 moving average. And I think I'd be pretty keen on getting on that. Smaller time frames is how you're going to get in on this, of course. We know the strength is long already. I'll go to a 15-minute chart and look for pullbacks to a 20 moving average. So if we get a 20 moving average pullback on a 15-minute chart, you'd be looking for long opportunities to join in on that trend. So pretty good trading on the Aussie USD, and good to see it actually finally turning around and starting to show some strength. The US dollar CAD has been pretty much a bit of a let's call it interesting for the week. It's no real surprises, I suppose. This is one of the ones that is going to get affected quite heavily by the events of this week. And you can see that we had a very, very big, heavy day on Monday of selling, but it did rebound, or it tried to. It rebounded all the way to an all-time high. Now, we know this was because of the Tuesday events, but it did close very, very low again. You can see that's a dragon. Well, that's a gravestone doji, really, all but, with a very, very big sell-off again after an attempted move to the 145. Now, it's got itself up against, over the last few days, it's been able to get above the 20 moving average again. To me, it looks like it's hanging on for dear life. It doesn't look like it's a trade that I'd be very keen on going long on. It looks to me like it's struggling to actually get higher again. It has been for a little while, going a bit sideways. These two candles worry me. It's trading above the 20 moving average, but only just. I'd be waiting for it. Look, I would wait for probably a 143 below daily close. If we get a daily close below that level, I'd be pretty keen on looking for shorting opportunities down to 141. So there's a couple of hundred pips there that we'd be pretty keen on, but I would let it get past this level here first, because then I'd be a lot more convinced that we're going to see enough weakness to get it there. At the moment, it's hanging on for dear life, but let's see if it can hang on the fight. This little area is the area of interest. If we start to see a series of higher highs and higher lows on the flip side, then we look for the previous highs as the target. Around that sort of 144.50 would be the level I'd be aiming for. Okay, so pretty good levels here. 144.50 is a target on the way up if we see a series of higher highs and higher lows on a smaller time frame like the 15-minute. But if we get a daily close below 143, we're going to start looking at that 141 as the target for the CAD. All right, we'll move over to the US dollar yen now. And this one has been nowhere near as dramatic as some of the other currencies this week. You can see it's still very, very much trapped inside this little mini zone between the 20 moving average and the 50 moving average. It's still standing pretty tough, and it is a role reversal zone here. There's no question about that. It's basically where it was last week, and all it's done is dropped a little, as you can see here, and basically got back to the same point. So this week has been a bit of a nothing week. But in saying that, though, looking at, there has been a range of about 100 pips. So, yeah, from a scalping standpoint, if you go to a 15-minute chart, their opportunities were there to trade it. This is the week's trading. You can see that we've been in this zone for the best part of the week, but you can see all the higher low pullbacks, and on the way down, lower high pullbacks on the 20 moving average. So plenty of opportunities to actually scalp it inside that zone. But yeah, we are definitely inside a very tight zone of 100 pips, which is a little bit unusual for the yen. Usually it's a little bit more dramatic than that, but it has been very well behaved this week. It's really, really simple in my mind. Look, we're at a role reversal zone here at about that 156. If we get a close above the 20 moving average and above 156.50, we're going to look for pushing up to the 158. That would be our target on the long side. And if we get a daily close below 155, which means it's broken all of this down here, we'd be looking for a 153.50 as the target on the short side. So basically pretty good trading. It's right in the middle of that zone. So really all we're waiting for is a daily break of either side, scalp it in between the two moving averages until we get a daily close above or below one of those moving averages or the two zones that it's set, and then aim for the two outer barriers, whichever way it breaks. So pretty straightforward trading on the yen. All right, over to the dollar index. And look, this has been weak this week. There's no question about that. It's broken the 20 moving average, trading underneath it, which is a real problem for it. Two very, very weak candles in a row. Attempted rally yesterday that has been basically undone by today's trading. And you can see it hit the 20 moving average and pulled down. This looks to me like it's only hanging on by a thread. We're at a little mini roll reversal zone. There's no question about that. We've got support here. We had resistance there. It is a bit of a roll reversal zone at around that 108 level. I'll pop a horizontal line there so you can see what I'm talking about. You can see this action here and also here. It would want to hold at this point, because if it doesn't, I think the next stop is 106, which is a couple of 100 points from this level here. So that's going to bode very well for the euro, of course. But look, we'll jump into the euro in a second. But yeah, it needs to hold at this level here for us to be confident, and it needs to get itself above the 20 moving average. If it can't do that, then the short side move is probably going to be imminent, because I think the 20 moving average will be bearing down on it and squeezing it through. So a daily close below that 108, and I'd be starting to look for the 106 targets on this one. But if we see a rally, basically 109, which is this resistance point here, is what I'd be looking for on this one. Euro USD, obviously it's going to be the opposite of what we just saw. You can see that we saw a really, really big move early in the week. It's been trading above the 20 moving average for that entire time. And really the big point of conjecture here is the 104.50. If we get a daily close above the 104.50, I would be looking at long opportunities up to the 105.50 in the first instance. I'd be keeping it at about 100 points as the target. But if it does roll over and trades below the 20 moving average again, especially if it's early next week, I would be looking for a retest of these zones. But more than likely, I think the strength is with the upside now, and the buyers have got it. We've got a lightning bolt. That morning star pattern kicked in and sent it flying, really. So it certainly did hold up at a very key point. So to me, all the momentum is there. We've got wicks pushing off the 20 moving average. It looks like it's only a matter of time before it breaks this level. So keep an eye on that level of that 104.50. If we get a daily close above that, then we're going to be looking for that next move up to the 105. I'm not really that keen on shorting this one at the moment, because to me, all the power is with the buyers. And the S&P, we've got, obviously, it's testing the all-time highs again. We can see that it's been a very, very strong period. The whole week has been very, very strong, as you can see. No real surprises there. We talked about it last week. Earnings have been good. And realistically, it's a hair's breadth away from closing at an all-time high. So we would probably imagine that this week is going to be closing somewhere up here. We don't want to be the first person to this party, of course. We really want to just let it play out. We should already be in this trade. It's been going for quite some time now. The smaller time frames have given you all the entries that you needed. It's been really, really solid. You can see here all the way up, 15-minute pullbacks to the 20 moving average all the way. So realistically, you should already be in, but in the sense that you should have already got a good piece of it. But really, I would be taking my profits at the top here, which is around the all-time high. Very high chance it's going to go through it and make a new high. But for me, I would rather get up there and test it from above, like we always talk about. I'd rather it test the all-time high, break it, and then come back and test it from above, and that would give us a launching pad. But while earnings are good, the sentiment is good, I would be very cautious about shorting any of the indices in the US at the moment, because they are looking pretty strong. Until we get a very significant change of trend, I would only be looking for long opportunities and being patient with this one. So it's been a very, very good trade, and hopefully a lot of people got hold of it, because it's been a very solid and easy technical to trade. So thank you very much for joining me this week, team. We've had some really good opportunities. The volatility has certainly kicked in. Earnings season is ripe now, and we're starting to see some really good moves and some breakouts. So we'll see what the next week gives us. But again, have a great weekend. I look forward to seeing you all next week.